Before we get started, hey, it's TWR's birthday month, and we have huge discounts on all of our platforms. Please check out this short promo video with all the details, and then after the video, we have other video content related on TWR products and services. After the video, check out some TWR hot products and services. Today's tech video, we're going to talk about volume. Specifically, we're going to talk about why it matters, indicators to use, and how, of course, to make money. So, when talking about volume, specifically with trading and investing, we need to understand why it matters. Well, volume is the amount of an asset or security that changes over a period of time, and usually through the course of a trading day. For instance, stocks trading volume may refer to the number of shares or option contracts that are traded between the open bell and the closing bell. Thus, trading volumes and changes in those volumes over time are what is important for technical traders, specifically when doing TA and DD, which is due diligence, looking for trends or potentially entry and exits on their trading or investing criterias. We have to understand that every transaction that takes place between a buyer and a seller contributes to the total volume of that particular trade and security. One transaction or trade occurs when a buyer agrees to purchase what a seller offers at a specific price. This can be either stock shares or option contracts or Forex, crypto. It doesn't matter the market or the security specifically, but it's basically somebody is selling something and someone wants to buy it. And the idea is the trader is buying something in order to trade for profit. And that's the idea around a volume. Most of the higher volume tickers that you will see surround the more popular tickers. One exception would be the penny stock market that typically spikes on specific catalysts or just volume alone because of interest into that ticker based off of a price or for some reason. But a lot of the times, the blue chip and mid cap stocks will spike on higher volume because there's an interest in that particular stock because of some sort of catalyst coming up, which gives rise to the increased volume or the delayed or consolidation of the volume. One of the keys to volume trading that traders and investors have to have is an understanding of liquidity. And basically, higher trade volumes for specific securities equal higher liquidity and better order execution and a higher active market for the particular sector or that stock in general. Now, when investors feel hesitant about a particular stock or there's an uncertainty, you'll notice that volatility will increase, which can cause the options and the futures and the stock volume of securities to trade more actively and then increase volume over the period of volume that it's previously had and you'll see a spike in the volume, which will drive also new investors into it because of the spike in the volume. Also notice that typically markets are hotter on Mondays and Fridays, and the volume tends to be lower during lunchtime at the Wall Street period, which is between 11:30 and 1 p.m. Eastern Standard Time. Now, this volume spike alone can be an indicator in itself, and a lot of traders like to trade bell volatility. That is, they like to trade the morning opening bell where volume and volatility is extremely high, and power hour, which is known as the last hour before the closing bell, which again, volume and volatility spike as well. But there are indicators out there that specifically are utilized to give technical analysis indications of volume trends and volume spikes and assist in giving the trader and the investor that edge when looking for the diamond in the rough or looking for the good entry criteria or even exit criteria if they're currently in a trade and they notice that the volume spike or the volume decrease might want to give way towards a trend reversal in the opposite direction of the trade they're currently in. So let's talk about a couple of the indicators that are commonly utilized with volume trading. The first bread and butter is bar charts, and these are utilized to quickly determine trading volume from a visual perspective because it makes it super easy to identify a trend in the volume. Essentially, when the bars on a bar chart are higher than average, that is a sign that there's higher volume or strength at a particular market price in that security. Obviously, the opposite is if it's lower than average, you got some weakness. And by examining these charts, analysts and traders can utilize volume as a way to confirm price movement. And that's important to understand. Volume correlates directly with price movement because you're looking for the trend in price action, which is price movement, and you're looking for volume as a confirmation or a catalyst for your entrance or your exit into your trade. So if volume increases when the price moves up or down, it's considered a price movement with particular strength in that security or that sector. Next, let's talk about support and resistance. And this is an important one that can be found on the main chart. And this is usually plotted with trend lines based off of price action. And the trend lines are put where area of price action is concentrated on multiple time frames. What you're looking for is you're looking for confirmation of the trend continuation or a trend reversal. So for example, if we're looking for a bullish continuation, we're wanting the price action to be rising and we want volume to be increasing to the buy side. We hit a resistance point and we're waiting for the breakout from that resistance point on some high volume buying pressure to give us the confirmation that yes, resistance is here, we broke through resistance, and the high volume to the buy side is present. We're looking for bullish continuation to the upside. Now, if we're looking for bearish continuation, we're looking for high volume to the sell side, and we're riding this down to a support level, and we're looking for not the buyers, but the sellers that are coming in, and we're waiting for the breakdown of the stock through support onto a lower level, usually down a classic two-leg strategy to a consolidation zone where we probably would want to exit out, expecting for a relief bounce based off of the negative price action to the downside. Now, what about the reversal? Well, very similar to what we just talked about with the breakout or the breakdown, we're following the price action to either a resistance point or a support point, and we're watching the volume to lower. So it's high volume, say on a break to the upside, high volume to the buy, everything's going up. And then once we start hitting that resistance point, we start noticing price action fluctuation, maybe some consolidation, but the volume of buyers starts to taper off, and we might even increase volume to the sell side. That would be an indication of a potential trend reversal where we would want to go short on a particular trade at that point, expecting the buyer's exhaustion to happen and a negative price action to the downside. The same idea with the movement to the downside from support. We get high seller volume, pushing it down to support, and the seller volume starts to subside a bit. Consolidation usually will occur, and then you get a spike in the buyer volume, looking at a trend reversal from the bottom, also known as a bounce, and you ride the volume up, expecting for that trend reversal. Now, another good indicator of volume is money flow. And this can be found in the money flow index and a few other ones as well. But essentially, it works similar to the RSI. But what you're looking for is you're looking for overbought and oversold conditions. But the formula with the money flow indexes has the volume indicated inside of it, unlike the RSI. So what this is giving you is it's giving you price action plus volume, and it's kind of giving you an indicator of what money is coming in and what money is going out. Anything over 80 on a technical aspect, you're looking at overbought conditions, and you should be expecting the reversal to the downside sooner than later. And anything under 20, you're looking at oversold conditions, and you should be expecting the trend reversal to the upside. Now, anything in between, of course, you have to use boxes of probability, which would go hand in hand with current trends, the main chart, and whatever type of moving average that you like to utilize on your main chart. Specifically, I like to use the EMA and a simple moving average as well. These are fantastic indicators that give you a great key, specifically if you're in a high volume type of stock watch. You know, if you got a few stocks that you're paying attention to and they're fluctuating on a high volume, these are some of the indicators you really want to focus on specifically for your entrance and your exit criteria, because these are the ones that'll give you the best bang for your buck and the best edge when you're looking for entrance criteria and exit criteria. Now, of course, the $1,000,000 question: how do we make money using this? Well, there's many ways to do this, but I have a particular way that I like to instruct others to at least think about their trading and investing, so that they can go out there and have a plan when they are strategizing their particular attack on the market, so that you don't go into battle without a solid plan first. Because if you go into battle and you try to attack the market with zero plan, ultimately you're setting yourself up for failure from the very get-go. And you might be successful, but more often than not, you'll end up losing out more than you gain. So with a solid plan at the very beginning, we can edge off that, and we can start off the battle with the right foot forward and go into battle with guns blazing, ready to attack, conquer, and destroy. So when looking to how we can make money off of the volume in trading and investing, I want you to consider the 5-3-1 method. And I'm going to explain it to you. And I know I explain it all the time, but I want to just kind of just beat it into the head because especially for newer traders and investors, it's a great, simple, basic strategy and plan to get you guys out there and ready to attack while you're developing and refining your specific individual plans as you become more intermediate and advanced investors and traders. Let's talk about the 5. All right. So we are talking about 5 focused stocks that we are watching. And with these 5 focused stocks, we want to ensure that they are high liquid, high volume, and specifically higher market cap if we're trading anything other than penny stocks. We're not talking about penny stocks here, okay? We're talking more about mid cap and blue chip type of stock caliber investments and trading, okay? Penny stocks, we can talk about that another time. Right now, we're talking about the big boys. Next, we want 3 reasons why to buy this particular trade. We can use any 3 reasons we want, but they have to underpin our main trading strategy. So if we're trading off of, say, volume and momentum, like we're talking about now, our 3 reasons why have to all support volume, price action, and momentum. So for example, 3 reasons why to get into a trade would be a defined price action trend, say towards a resistance line with increased volume and rejection of the resistance line towards a breakout. And then that would give us our 3 reasons why to go ahead and buy that particular stock. Say we got the reversal at the resistance line and volume ended up coming down and we even consolidated. We would wait till we confirmed reversal because now we don't have the 3 reasons anymore and we're waiting for the confirmation of reversal. And once we got rejection at resistance, we got increased seller volume and a defined trend line. Now we have our 3 reasons why to buy the short of that particular trade reversal, if that makes sense. Which now, of course, brings us to our 1. And the 1, of course, is we only need 1 reason why to exit. And usually we want that 1 reason why to exit to be because we're in profit. But this can also be, well, it hit our defined stop loss level, so we're going to go ahead and exit. Say we were going long and we rejected off of that support line, that resistance line, and we were already long the trade and we rejected it and it started flushing to the downside. That would give us a reason to go ahead and exit that trade because we had the sharp trend reversal, or we might have made profit already. We hit our 20%, we hit our 50%, and maybe it's not even the reason why to exit, but we start to prepare our exit by adding a stop loss to prevent a flush of loss of profit. So we're up 50%. We move our stop loss above break even, and now we're risk free. We push up 75%. We move our stop loss up again. Now we're riding the wave, so on and so forth. But the main point here is we only need 1 reason why to exit the trade. All right. So that's all I have for you today as far as the tech video is concerned, dealing with volume. I just wanted to give you guys a little bit of guidance because I had a lot of questions this particular week as we were dealing with a lot of price action that was associated with some choppy volume. And I felt like it would be a good time to go ahead and get a video on volume because we haven't talked about it for a while and put out some decent guidance. So I hope that you got some value and worth out of it. I hope that you learned something that you may not have known, or maybe you forgot and it's refreshed. And I hope that you utilize the 531 strategy, specifically if you're a newer investor or you're maybe a little more seasoned investor, but you're starting to have a little trouble staying consistently profitable. Sometimes it's good to just get back to the basics while you tweak and refine your current strategy so that you can become profitable once again with just a few minor tweaks after you get everything taken care of. Other than that, man, please check out a couple of the short videos we have directly after this that give you ideas of some of the products and services that we have. Keep a lookout for the YouTube videos that are pushing out and the social media posts that give great information of what TWR has going on. And as always, if you're ready, follow me and let's go to war together, and I'll see you on the battlefield come Monday when that bell rings. And don't forget to tell a friend, we always need soldiers in the fight, and we love new battle buddies coming to the team. Catch you guys later. And now, please check out some of our hottest products and services. Join TWR today and learn why we are the best trading and investing platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Join TWR and let's go to war. Traders War Room is proud to present our hottest new feature, text message alerts, available now on the TWR storefront. If you enjoy trading and investing, you're probably familiar with some of these popular applications. These are all fantastic, but they can become overwhelming and difficult to navigate throughout the day. Add in the stresses of work, life, school, family, and you become frustrated and overwhelmed, missing opportunities. Guys, that's so me.
Yeah, that's me.
This stops right now. Welcome to TWR's text message alerts. It's super simple too. So we watch the market, and when we see a setup we like, we push an alert like this. You as a subscriber receive this. And don't worry, we give you an exit too, just like this. So for more information, check out our storefront, links in the description. And remember, when you hear this, Traders War Room is making you this. Traders War Room is your one-stop shop. Try our TWR one-to-one mentoring. Does the market have you feeling like this? Or wanting to rip your hair out while you watch your account dwindle? If that's you, then Traders War Room has you covered. Our one-to-ones focus on you as a trader or investor. The Zoom session connects you with a TWR professional. Whether we're covering charts, developing a plan of attack, or being strategic and deep diving on the how, why, and execution of trade plans. TWR one-to-ones will give you the confidence to attack, conquer, destroy, and make the market bend the knee in 2023. Join TWR and bow to no one. Book your session today. The link is in the description or on the website at traderswarroom.com. Let's go to war.